Welcome to TradeTheMBI.com. This is John. This report is for the 1st of June, and well, in California we used to talk about June gloom, but certainly not the case in Italy. Nice little retrace that developed on the day and went right to the ABM magenta here and just right above the white, and retraced completely right back above it. I mean, it was literally, we expected some weakness given the pop-up here, but we had the reset from below, and as soon as it started to come down, got the turnaround buy signals, and also never dipped below the red line with the extreme turn right around. So it's poised for what we were talking about. We would expect to see the orange continue all the way down. If it pivots back up, then we're just going to get more of the same malaise, which would be, sad. But I can't imagine it's going to happen. We've had quite a consolidation here. It's time for a break move. You can see that even the NASDAQ, even in its much less weakness, has been extraordinarily strong. And so the next move is set to take place. And of course, like we talked about, the beginning of the week is going to see fund inflows from pensions and that trade is going to start to begin at any time now. Euro continuing to be at the high side of the peak. We're starting to see lower shakeouts on it. We had a bit of a spike here. With the orange, we should have seen some retrace, except for the fact that huge reset of short-term buyers leaves that wide open. It'll probably get some backfill though. And bonds continue to rise. It's such a counter-trend move to safety. And this is just an indication that people really think things are a bit over the top, and that's okay. You can think that, but the market is behaving exactly the opposite. And oil, we expected that short when we had the break of the ABM yellow up there at the 1040 range, and 1050, almost 1048. Boom, not a surprise. Again, this is the same old story. They're going to have a tough time reeling that in because just more and more capacity and oil just keeps coming available. It's a real issue. I think the days of OPEC having any formal dominance are pretty much over. Amazing what a change in policy for the U.S. Could have such an impact on it. And gold, it's going to continue its uprise, a little overbought within this, so it may need a little more consolidation. It's going to need some evidence that, one, there's either flight capital from equity markets, which we haven't seen. There's no real yield anywhere else, and it just becomes a safe haven. The question is, from what? If there's no inflation and you keep seeing bonds going up, that's an indication that the Fed isn't going to be doing anything as far as tightening in that, which is counter to what they've said. Go figure. These are some of the real difficult dichotomies that people are starting to have to grapple with. So here we had the pre-market spike. We got above the ABM and then boom, collapsed. And then it pretty much stayed down there until we got a reset not too far off the bottom. It was right down there in the 2406 range. That short took place real early on with the move to the plus 13. So it was a decent move, and then the buy came in, and it sort of was flat for a little while, and then boom, started to carry it and went all the way back up. So captured it from the top to the bottom, and just off the bottom to the top again. You gotta like it when it can do that. That's very effective. And some of the adjustments I've been making with long short algos within the ABMs, you're gonna see those things I've been working on them because it's gonna give us a better tracking of the ABM from the upside as well, so that we don't get this just big angle drop when it goes across. We'll have the high line stay, but the other ones will adapt and configure more with the fib level retrace as well, so that way it's tied in, and that way you don't have to do multiple things, and it should just clean up the chart, and we won't be seeing the red lines in that. So I'm in the final testing stages of that, so that's going to look pretty good, and that will just make it a very clean, elegant look, which ultimately is what I'd like. But it's been very effective in seeing how when we have the steel above that 7.5 and you get the orange resets, you tend to see a little bit more weakness before it turns around, and that happened a few times. Even in the last one, it didn't quite get up to the 7.5 on the last one here, and you can see was much more effective in the build. So it's worth noting those particular situations. It has an impact because you're looking at, how much strength those short-term buyers have, and in conjunction with long-term buyers. In this particular case, you had the crossover of both, and not quite getting overdone, left it a little bit of room. So that's the long and the short of it at this particular point. I think that the fear element is probably going to help drive the market even higher, which I know is a consternation to a lot of folks who think that it's just crazy exuberance. But the reality is, if even a little bit of what's being talked about gets squared away, there's going to be continued growth to the upside, and that will have significant impact as far as valuations. It's going to be less about earnings in that particular case and more about, how fast will things be growing, and will you get, a 3% GDP that would cause, significant move, and then we'd be talking about ES in the 3,000 range instead of, 2450, which we're very close to. Though we also have the 2550 as the next one after that, but it's relatively close. It shouldn't be too difficult. As always, though, trade well. We'll talk again later. Indicators are out for all the members, so this will probably come to an end for a little grace period I've been giving for people to get the videos publicly. They're going to start going back to private as the adjustments are made on the new indicators. Just too effective to share with everybody because it's valuable content. As always, trade well.